CPI numbers encouraging on inflation. Is that what's driving the markets right now?
It is. And we knew that going into the week that investors would be focused on the inflation report. There were whispers that the inflation report would surprise to the downside. It didn't. It came banging on target. But it confirms that inflation is continuing to come down. However, the battle's not over. And I think investors should, and certainly the Fed will likely stay focused on the labor market. And we still see wages really running red hot. So the inflation fight's not over. We probably have a few more hikes ahead of about 25 basis points.
Oh, that's interesting. Afsaneh, a few more hikes ahead. The question for me is, it may not be over, but how close is it to being over? What do you think the Fed's going to think when they meet at the beginning of February?
I think the Fed is still trying to remain relatively hawkish, and as David said, pretty sure they will do that 25 basis points in their next meeting. They are looking, as he said, at the employment numbers really carefully, and also, of course, at earnings reports that are coming out as we speak. So I think those two items will be important. Wage growth is starting to show a little bit of maybe a softening. We're seeing people starting to talk about laying off in certain sectors like finance and technology. So I think all of that will factor into the next conversation about rate hikes.
So, David, we're all focused on the Fed, and we will be for some time to come. But I know you think that we also should be looking at other parts of Washington that may actually be affecting the investment criteria right now. And what should we be focusing on as we go into 2023?
Well, there's a lot of things going on. So with inflation, I would argue the near-term focus really should be on the labor market. We do have disinflation on goods, and we've had some on commodities, but the disinflation on goods is because we are entering a goods consumption and goods production recession. And I think we'll hear more about that during earnings season. So in the near term, stay focused on the labor market for where inflation goes, what the Fed needs to do about it. But longer term, yes, I agree that the longer term inflation outlook has a lot to do with policies, both at home and worldwide, but policies that relate to how well we spend, what type of return on investment we get on things like energy transition, even defense, and so on and so forth.
So, Afsaneh, when we hear energy, we think of you necessarily. You've had a lot of your career tied up with energy. You studied it, as I recall, at Oxford as well. Tell us about the federal policies right now in energy, how they may be affecting some investment decisions.
The interesting thing is, obviously, when we talk about policymakers, we think about the Inflation Act. But just before we go there, I think what's interesting is the concentration of the market has been on what the Fed is doing. And what is interesting is President Biden and his team have been equally focused on removing some of the supply chain problems. We saw what they did with, for example, the trains unions. We saw that, for example, the energy reserves that were released and where that was one of the reasons that gas prices are where they are, among other reasons, of course. So government has been much more proactive when it comes to different areas, but in terms of its policies, but particularly when it comes to energy. And I think it has quietly been quite effective in keeping energy prices down. We've seen, by the way, similar things in Germany. And then coming back to the IRA, of course, that is huge because there's the direct impact of the IRA, which is over $300 billion. But there's also the leverage impact in the sense that we're seeing already a lot of private sector deals happening, whether you look at big private equity firms that are doing very large projects, people investing in clean energy, but also in things like LNG terminals for the short term. And then last but not least, venture firms are looking at hydrogen projects because they're seeing again with the IRA that there is potential for some of these investments that are longer term investments.
So, David, when we talk about energy, we have two sides of the house. One is the fossil fuel side. There's a question of that. The release from the SPR, the Strategic Petroleum Reserve, certainly affected that. But you also have investment decisions like Ioneer now is something like a $700 million loan from the Department of Energy tied to that Inflation Reduction Act. So as an investor, what should we be looking at?
As an investor, what you want to do is look at the prospects for return on capital. And we would expect that there'll be a lot of investment spending through government programs like the Inflation Reduction Act, but the CHIPS Act, investment spending that's done by the energy sector, the alternative energy sector, the electric vehicle sector, the utility space, semiconductors. But the question that investors have is, what's the return on investment going to be? And certain industries have a history of producing poor returns on investment, energy, auto, and others have done better, or at least are regulated, like utilities. So we do expect a lot of investment spending to come in this space. We have yet to really figure out, will this be good for investors and what type of return on investment we will get?
Afsaneh, let's ask you the most basic question. When it comes to the green energy area that now is going to get some subsidy from the U.S. government, is that inflationary or deflationary?
Depends on, how, if it brings down total energy prices, that would be obviously not inflationary, right? In the meantime, if you say that it's creating, by some accounts, 9 million new jobs over time, of course, over a long period of time, you could say that that could have an impact on people having a larger ability to spend and consume. But I think that's much longer term. I think in the short run, if it starts bringing down the overall cost of energy, that is good in terms of our worries about inflation.